For the first question, it is required us to determine the methods allowed by Mfrs 116 for subsequent measurement. So under the Mfrs 116, there are two methods which is that allowed, which is cost model and revaluation model. The first step to calculating the carrying amount of the building is we need to recognize first the depreciation method used by the company, whether it is straight line method or reducing balance method. In this case, the company used the straight line method. So we need to calculate the depreciation expense for building every year. We need to cost of purchase of building will be deducted with the residual value and divided with the useful life of the building, and we will get the 40,000 ringgit for the depreciation expense. And for the carrying amount of building at 31st December 2020, we need to calculate the cost of purchase building, which is 1 million, will be less the accumulated depreciation for the year 2020, which is 40,000 ringgit, and we will get the carrying amount, which is 960,000 ringgit. Now let's calculate the carrying amount of building for the year ended 31st December 2020. In order to calculate the carrying amount of the building is measured at cost less accumulated depreciation, while the accumulated depreciation of the building will be represents the cumulative amount of depreciation charged against the building from the date of its acquisition, which is 2020, until the reporting date, which is 2021. It is subtracted from the cost of the building to arrive at its carrying amount. Hence, the accumulated depreciation is cumulated from the year 2020 and 2021. Now, let's see the presentation in the financial statement for the cost model. In the statement of profit or loss and other comprehensive income, MFRS 116 requires that depreciation expenses should be recognized as an operating expense, and therefore, the depreciation expense of building for the year ended 31st December 2021, which is 40,000 ringgit, will be recorded as the operating expenses. While in the statement of financial position, the building should be measured at cost of building and less the accumulated depreciation of building, and we will get the book value, which is 920,000 ringgit. The first step is to calculate the depreciation expenses for building for every year. For the under revaluation model, the depreciation expenses will be calculated same with the cost model, which is the cost of purchase building will be less the residual value and will be divided with the useful life, which is 20 years. Next, we need to calculate the carrying amount of building at 31st December 2020. Based on MFRS 116, for the purpose of calculating the carrying amount of the building at the end of 31st December 2020, the building is measured at cost, which is 1 million less accumulated depreciation. Next, because of the building is revalued at 31st December 2021, we need to calculate the gain or loss on revaluation of the building. We need to calculate the carrying amount of the building for the year 2021 first. So the cost of the building less accumulated depreciation to get the carrying amount of building. The accumulated depreciation of 80,000 represents the total depreciation expense recognized on the building since its acquisition. As the revaluation had taken place at the end of the year 2021, the full year of depreciation was charged. So the building was revalued to its fair value, and the carrying amount and the fair value is greater than its carrying amount, so the building will get the gain on revaluation of the building, which is 380,000 ringgit. Next is to record in the financial statement. Based on the MFRS 116, the depreciation expense of building will be recorded at the statement of profit and loss and other comprehensive income, while the gain on building revaluation that we calculated earlier will be recognized at other comprehensive income. While in the statement of financial position, the building will be measured at the fair value, which is 1,300,000 less the accumulated depreciation of building, and the revaluation surplus will be recorded under the equity of the statement of financial positions. And the last one is under the revaluation model, we need to record the gain on building revaluation under the statement of changes in equity. The revaluation surplus account is used when the building or an asset are revalued to their current market values. Hence, the gain on building revaluation, which is 380,000 ringgit, will be presented as a movement in the revaluation surplus in the statement of changes in equity.
The first finding that we got is measurement after recognition. Under the cost model, building is measured at its cost less accumulated depreciation, while under revaluation model, the asset measured at its fair value less accumulated depreciation. The second one is the step in calculating the carrying amount. Between cost model and revaluation model, cost model only calculate the carrying amount, but under revaluation model, after calculation the carrying amount, we need to calculate the gain or loss on revaluation building. The third finding is the presentation in financial statement. Both cost model and revaluation model will be recorded the depreciation expense of building under operating expense, while under revaluation model, we need to record the gain on revaluation of building under the comprehensive income. In statement of financial position, the building will be measured at its cost less accumulated depreciation, while under revaluation model, the asset measured at its fair value less accumulated depreciation. and we need to record the revaluation surplus under the equity. Under revaluation, we need to record the revaluation surplus in statement of changes in equity.